marketgauge.com with this month's installment of your Daily 5. Thank you, Stock Charts, as always, for giving me this platform. For today, I want to cover with you something that I started thinking about in December that I started to call Mish's Vanity Trade, all about me. Obviously not me personally, but in the trend of consumers, and as we know, the consumer really is amazingly strong as we ended 2023. We're kind of watching what happens here as a trend change in 2024. I think it's going to be more about not spending money necessarily on the travel and on vacations and on eating out, but more on self-improvement. So that can include anything from fashion to self-care to makeup to even the dieting and that whole trend that's happening right now with some of the new designer drugs. So in terms of the stocks that I want to look at, Coty, this is one I've covered before, IPAR, that's perfume, TJ Maxx, Abbey, and I'll explain to you why when we get there. Another one in that sort of area, which is Novo Nordisk, and we'll end with Shopify. So let's get started. Now for stock charts, we did, Jeff Bish and I, president of MarketGauge, we did a whole thing on the calendar range and how important the January calendar range is in terms of a reset for the next 6 months. So with that in mind, you're going to see, I'm going to try to keep the charts as simple as possible. You're going to see all of our plugins because I use them every day. The leadership one down here, how it's performing against the benchmark, the real motion, which is our momentum indicator down here, obviously the moving averages and the phase that a particular instrument is in, and also the calendar range, which you can see here, the red being the low, the green being the high, that reset. And so where things are in a range is extremely interesting. So if we start with Coty right now, we can see that it had a golden cross, which is something that it hadn't had in a while. So that was a good thing to see, number one. But number two is we're really in a sideways consolidation while it still continues to underperform the SPY. And in the momentum, we're really not seeing any great divergence other than the fact that this is still under the 200-day moving average while it's over it here. And this is actually more in a recuperation phase while this is in a bullish phase. So we are seeing that divergence. So maybe what's going to solve whether or not this is going to become a buy would be if we finally can get through that January high. As you can see, the calendar range here comes in at 1252. Now, I think the momentum is improving, but I would certainly be writing down this area at 1252 as a point that I'd like to see clear. And then I think you have about $1 risk. This is what's so nice. It would be a breakdown under both moving averages and also under the 6-month calendar range low. Then you would know that there's something wrong with the stock. So this is the first one to keep your eye on. The next one is Interparfum. Now this is similar to Coty in that you can see in terms of the calendar ranges we've established the low. However, it's not as in strong a phase as this is still in an accumulation phase because the 50 remains to be under the 200. However, it is getting a little bit of traction as I'm talking to you today and still also underperforming the SPY. Momentum you can see as well is again in a little bit of a bearish divergence in that we've got the 200-day over the 50-day moving average, but it looks like we're clearing the zero line. So now this too has some room for improvement. Now if we step back and look at the overall chart formation, it does look like potentially we're developing some kind of a right shoulder to the left shoulder if this is the head, in which case the bigger breakout would of course be up here, but we don't have to wait for that. At this point with this particular stock, I would say obviously knowing your risk is important. So we're at around 130 to 60 here is really the area that has to hold. You can even say at this point it would be over the 200-day moving average. And you can see that we're getting into all this resistance here. So maybe I would be a little bit more patient. It doesn't mean that it's the worst idea to buy in the middle of a calendar range, but you just have to be somewhat nimble. So this is something you would either be doing like I'm going to put it away because I believe in the stock, or I'm going to nibble here at around 139.60, 140, have my stop under these lows right here and see if we can't get a move. Or, of course, the next option would be to just be patient, set an alert, which you can so easily do on stock charts for when this takes out the 6-month calendar range high here at 143.60. The next one is TJ Maxx. Now this of course had a hugely unpopular stock yesterday, last year, but right now you can see how this thing is developing as well. Now this was outperforming the SPY, and now actually has fallen up a little bit because obviously the SPY has been going nuts to the upside with its new all-time high. And momentum, we had a little bit of a mean reversion, and also interesting here in the divergence, and I say mean reversion to the sell side, is the 50 is still under the 200 while the 50 is well above the 200 here. So all of these stocks have not necessarily made the move that I've been looking for yet, but all of them are on my radar, because at this point now, to be sitting here and pointing out stocks like Nvidia and some of the other growth stocks, I would assume that they're getting a little long in the tooth and we're waiting for earnings seasons on them. But nonetheless, I always like to look for the next opportunity. So that's in terms of that. Now, of course, it's in a bullish phase, and look how nice that 6-month calendar range low sits right with the 50-day moving average. So clearly, if we got any kind of correction down to around 92-ish, that would be compelling with a very tight risk. Or, as you can see, with an inside day forming as I'm speaking to you and the calendar range high up here at 95, 92, it's possible that if we take that out, depending again on what type of trader you are, this could be something that can continue to do well. Now, of course, we have a lot of news to be looking at, and you could see that this would also be a new all-time high for this stock. So if you're following momentum here, that would probably...
If you're an options trader, day trader, or stock trader, and you're losing money in the market right now, or you're not making enough returns, it's not your fault. You're actually swimming against sharks. But
not be the worst thing in the world. And what you can do is very simply say, okay, if it breaks out here, if it fails now under this 93.86, I don't want to be long anymore. Now, in terms of AbbVie, this might have been one of my greatest disappointments, because as we started the year, this thing just flew. And so day one, you had to be prepared. I was kind of hoping we'd have a little bit more consolidation here, but it didn't happen. So instead, look what's happening up here. So this is outperforming. It did have a little bit of a mean reversion, but the momentum is coming back. We had a golden cross here as we had a golden cross here. So everything's cool with momentum. And look at this, guys. This is now starting to take out the 6-month calendar range high, which I can give you the exact number here, is at 165.12. It's trading at 165.30. So again, if you had to pick a place, I would say around 160 now, maybe a little bit lower, under around 159.50 would be your risk factor, about $5 to see if this thing can keep going. And right now, I like AbbVie for a lot of reasons. In terms of the vanity trade, this is one that is making some of the diet drugs. It also makes a lot of the fillers. If we're going to be looking at people feeling more vain, this would certainly be a company that can benefit from that. The next one is Novo Nordisk. So this is making the actual diet drug that people are starting to look for to take, and it has got controversy and it is expensive, but nonetheless, there was a whole piece on it on CBS Sunday Morning yesterday. So, you know, when you get to that mainstream, that gets my interest. And of course, if people actually start to have more access to this drug and start losing weight, that could actually filter into them feeling better about themselves, going to gyms, starting to date, buying nicer clothes, getting more makeup, etc. That's why I'm so interested in this space, because I think it's a huge area. And of course, this is always assuming that the market is going to continue to stay strong. You know, it started with this gap up here, never filling that gap. So now we are obviously in a bullish phase. It has started to underperform a little bit here on the SPY. And you can see now we've got a little bit of a negative momentum here because we're breaking down under the 50. To me, that's good news, because we've got a 6-month calendar range low to be watching. I would love to see this come back down closer to 102 to take a shot there. And if it broke down under 102, I would still be looking for some kind of a dip buy. And at this point, obviously, if you're a momentum trader and you want to wait for those highs, it has to clear 109. So it's right smack dab in the middle. So I'm purposely giving you this list, obviously, except for AbbVie, of things to put on your radar, set with alerts, because these are the trades that I'd be looking to go to as opposed to jumping in right now. Last one I'm going to cover here with you would be Shopify. Shopify right now outperforming the SPY. That's good. We've had a little bit of a golden cross here, so the momentum is not as good as the price, but it's certainly going in the right direction. And if there's any reason why at this point you don't believe how strongly these calendar ranges work, look how it was rejected here even today on the calendar range high. So 83.19 was really basically where it had to go. Today's high was 82.83, and you can see we're getting some kind of an inverted doji candle. But if we can't get through, then I'd be looking for a move back down to the 50-day moving average. Maybe even it breaks the 50-day moving average down to sort of these supports. And if you also recall, one last thing I'm going to leave with here is that very often the calendar ranges that preceded the new calendar range becomes the interesting support and resistance. And you can see that the 6-month calendar range low is pretty close to the 6-month calendar range high that we had in July. And if we did break down, the next 6-month calendar range low from July is very close to the 50. So again, a lot of this is going to have to do with the macro of the market, with the SPY doing so well. Granny retail is still relatively struggling, so perhaps I'll just give you a last look at Granny. I think this is an extremely important aspect of the market. All that she's done so far is hold the 6-month calendar range low in the 50, underperforming. You can see here that the momentum is it's sitting on the 50. This price is doing a little bit better, but if it cannot, or she cannot, get through 70, then perhaps all the trades that I'm going to give you are going to be great ones to look at on any kind of overall correction, because I do believe that if the consumer area of the market can't keep up with growth, at some point we will see that correction. Of course, that hasn't happened yet, but hopefully this gives you a good game plan till I speak with you all again next month. So thanks so much for watching, and bye for now.